Ladies and gentlemen, we're going to make sure you're listening. Our next presenter, who was born and raised in New York, where he fell in love with trading while visiting his then girlfriend and now wife, Lisa, at her job on the NYMEX floor in the fall of 1982. In 2008, he moved from New York to Las Vegas and established OMNI Trading Academy, where he teaches select students the OMNI triangulation and trading. He's filled with vast knowledge of trading, analysis, and trend formation. By simply following trend lines and identifying formations in the chart will tell you all you need to know. And he's said many times before, the chart is just a graphical representation of the day's news. Ladies and gentlemen, here to present, according to the charts, not the word on Wall Street, the bottom is in, is Mr. Oscar Carboni of livewithoscar.com. Welcome back to Traders Corner. Oscar, check your mute button for us. Oscar, I'm having trouble hearing you too. Would you double check your mute button, Oscar? Here, let me click it for you. You're self-muted, Oscar.
How about now?
Ah, much better.
I know why you have trouble. You have to go find that mute button. It's not right in your eyes. Unmuted, muted. You have to literally go find it. So I found where it was.
They hit it on purpose because everybody loves the sound of my voice.
Anyway, a round of applause for Ken. Thank you so much, Ken, for putting this together. Ken, Rob, we love you guys at Traders Corner. We appreciate this. And, of course, thank you to all the presenters before us. Fantastic stuff. I promise I'm not going to sell you or offer you anything at all. What I'm going to do today is show you why the charts have absolutely told us the bottom is in. We knew that when the bottom came in. And, of course, I did a webinar for Ken back in February when we called the bottom. So you can go back and take a look at that. But it's got nothing to do with me personally. I've got 41 years experience in this business. And what it tells me is that I don't know anything. The charts know everything. And if I can keep my personality out of this and my crazy opinions based on everything that we read out there, the chart will tell me what's going to happen. So with that in mind, I've got a couple of questions for you. And of course, a little bit of a statement, and then we'll move right into the charts. The reason why the market stopped cold on January 4th, 2022, the highest day the S&P ever traded, was two simple factors. One, the Fed started raising rates. That was it. Started to knock us down. Two, inflation spiked to all-time highs, forcing the Fed to elevate borrowing costs. Now, I promise you this, because I just use technical analysis, I know the fundamentals. I'm a very well-versed fundamentalist. But when it comes to making calls, I let the chart include all the fundamentals. And what I will tell you is this. On the absolute highest day the market ever traded, Jan 4th, 2022, I did a video. Basically, the top is in. You can copy this little URL and take a look. If I record this, I'll put the links to these videos underneath. But the chart told me to tell my omniacs, my followers, the top would be in on January 4th, and that's when it came in. Now, since then, I've done another video on February 7th, 2023, a year and a month later, and I wrote, "This is how bottoms are born." And I told everyone, that's it. Now we're going back up. And I will show you why that is, how we're going up, and that no matter what you hear, the fundamentals out there are so scary. Every fund manager I speak to, I've had people call me to say, "Oscar, you're calling the upside. You're going to ruin your reputation." And I tell them, the reason why people follow me is because I wouldn't take a call from someone like you. Click. The charts speak for themselves. So watch. In terms of both, where are we now technically? We had interest rates go up and inflation spiked, right? So where are we now technically? That's all I care about. According to the charts, inflation in many industrial retail commodities have abated or pulled back. Now, if the top of inflation is in, the bottom of the stock market is in. That's how it works. I'll show you on charts. There's only one caveat that can take place here. The Fed, the FOMC, is at a very interesting juncture right now. We are just about at 5% interest rates. They're about to raise rates again next week. If they raise any further, they will cause an avalanche in the stock market. And the Fed knows this, and the Fed will go into a pause mode right after they raise. Do you know why? Because anyone with enough money, if you are running a sovereign fund, let's call it, and you're running a sovereign fund from some country in Africa, and you can get 5% guaranteed return, government guaranteed risk-free return, 5% on your money. Or you can risk getting between 7 to 10% at the S&P with great risk to that money. What would you do? It's a no-brainer if rates go past 5% that you just take the money and throw it in bonds, because there's no need to risk a possible 7.9 to 10.5%. Maybe I can get, but I've got to risk the whole entire balance. I've got to risk my whole account, or I can get 5% guaranteed without any risk at all. If you're a billionaire, you don't need your money to go up. You need it to not go down at the end of the year. It can stay where it is. You move it into bonds. The Fed knows this. We are at that pinnacle. If the Fed raises past this next raise, we're going to have a serious problem in the stock market. Now, that's different. That's a fundamental. Now we're going to go look at the technicals. Forget the fundamentals. I just wanted to throw it in there. Fed really has to stop here, because then it just makes sense to not put money in the stock market anymore. So all I'm going to do is invite you to my live trading room. You could just come to livewithoscar.com. It is absolutely free to you. If you like what you see in this video in the next 30 minutes, 40 minutes, you come down to livewithoscar.com. Oh boy, I just went into HD mode, kids. Sorry. It'll be back in a moment. You go to livewithoscar.com, and you can then, after that, you can literally just log in and come see me in this live trading room I'm about to show you. You can sit with me in a live trading room where I'm on camera and microphone 24 hours a day practically, and it'll cost you nothing. I just have people hang out with me while I go through these rough and tumble markets. Now, if we can get out of this HD mode, I can show you exactly what you need to see. Check this out. So what you have here is a situation where Apple is the leader of our markets right now. Apple absolutely, positively has been the leader of the markets. And kids, I just have to make one little switch right here. I'm just going to change my screen so you can see everything that's on it. Sorry about that. But if I don't do this, you won't be able to see what's on the screen. So let me just show you everything on the screen right now. So I've got some pretty charts for you to see. All right. So I will tell you this, and I have shown this, and I have shown this to you in many of my presentations. Apple is a huge component to the stock market and is the current leader of U.S. indices. Just remember the risk behind trading, kids. It's a very risky game here. You know, you can lose so much money in this game if you don't know what you're doing. So never trade without stops. But watch this. Apple is the current leader right now. Apple put in this thing that I like to call an inverted head and shoulders, an upside down head and shoulders, if you will. Left shoulder, head, right shoulder, which led into a massive rally. Now, how do you know when a market is bullish as opposed to bearish? Like the whole street keeps calling it, and I'm in shock. How do you know? Because it puts in a low and then a high. Then it puts in a higher high and then a higher low. And then it puts in a higher high and then a higher low. And then it puts in an even higher high and a higher low. And it's about to put in another higher high. So the pundits out there that are telling you that we're in a bear market, I don't know what they're looking at. I honestly don't know where their heads are at. Anyway, that's one, right? Check this out. Here's another one. Look at Facebook. It's the foundation. It is the future of the metaverse, which is the future of where we're going on this planet. I promise you. NFTs, crypto, using blockchain, that is where the world is going. Now, Facebook, way back when it was $90, I did a webinar, and I think it may have been one of Ken Calhoun's, if not, maybe it was Metastock, live webinar. And I said, look, Facebook, Meta is putting in its legs. It is a huge component to the stock market. It is putting in a bottom. If that bottom is real, it's going to explode and take the market with it. Now, that literally came from me when we were down here. All right, and here we are. It's doing its job. So if Facebook, Meta, is a huge component to the stock market, and as we know, Apple is a huge component to the stock market, and they are both bulling their way up. That tells you that there's probably more proof that the market does want to go up, not down. So what else is out there to prove it? Let's take a look. The NASDAQ. Everybody knows and loves the NASDAQ, right? And everyone's talking about the downside, and it's going down, and it's the end of the world. And I kid you not, I don't get this. And you will be in my side, on my corner, in the bull corner at the end of this presentation. Here's a bull flag, very simple formation in the NASDAQ. What does it do? It bounces off the bottom of the bull flag, back to the top, bottom of the bull flag, back to the top, and it is about to break out of this bull flag and put in new highs. A market that is bearish doesn't look like this, kids. A bear market, I promise you, doesn't have lines that go up this way. Right? You don't get a bear market when you start at the bottom left of your screen and go up to the top right. That's not a bear market. This was a perfect hold in what's been a bull market. But there's a lot of proof here. Watch this. Now you look at the YM. Okay, now everyone's saying this is distribution. This is the top of the market. It's the end of the world. I'm hearing it from every fund manager that I know, to the point that I can't listen to it anymore, right? All right, so at first glance, you say, okay, this is a big resistance line. The market created a line, hit it, failed. Hit it again, failed, created a bear flag. Oh my God, this is the most bearish thing in the world. All right, but then look at it on a weekly. Does this look like a scary market on the weekly chart to you? Does that look like a bear market to you? It's a weekly chart. All right, so back here, that looked like a bear market. Boom, 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 right? This doesn't look like a bear market to me. It looks like a market that doesn't go straight up because nothing goes straight up. So it put in a high, and then it put in a low, and it's going to try to put in another higher high now. We'll see where it's going to go. But it doesn't look like it's just falling apart to me. All right, so let's go to the daily. And we saw the YM on the daily. Let's do this. How about the Dow? Look at the Dow itself. This is the market, right? When you first look at the chart, you say, well, look, it is coming down, but not really. It's more consolidating than coming down. It doesn't look like a bear market. And look at it on the weekly. Does this look scary to you? I mean, does that look like a broken market that's falling apart like you hear on TV every day? I don't see it that way, kids, but I started calling the bottom because of the charts in February of this year. People are now still calling for downside. Only a few people have caught up to what's happening here, but you will know at the end of this presentation. So that is the weekly, right? We're looking at the Dow Jones weekly. So we've just talked about the market. Is it really falling apart? I don't see it that way. Let's go now talk about the other side, the other question, inflation. All right, let's go see that. So when inflation was at its peak, soybeans was $17.84. Soybeans are used in everything from food to plastics and tires on your car. I promise you, soybeans are used in everything. Soybeans were $17.84. Soybeans are now in the 1400s. That's deflation, not inflation. All right, so that's one thing. Let's keep looking. Wheat. By the way, if you like what you see, you go to my YouTube and subscribe. I'll show you guys how to do that later. I do videos like this all the time. Check out the wheat. Peak inflation. Wheat, I don't know, 1,400, 1,500. You know what wheat is now? 614. 614. This is not inflation. We had inflation. The Fed had to raise rates. They have stemmed inflation. It just doesn't land on the shelf yet. When you start seeing commodities go down, the price on the shelf doesn't go down yet, because if you take a boulder and drop it into a quiet, pristine lake, you drop it in the middle of the lake and it creates wakes or waves. Those waves don't hit the shore for quite some time. So we've got the deflation already happening. It will hit the products on the stores eventually. So this is your wheat. Remember, the whole world was going nuts. Oh my God, there's not going to be any wheat left. The price of wheat, well, it's been going down since the Fed started raising rates. So let's go to the daily on wheat. Look at this thing. This is inflation at its crest. All right, well, this is what we have to pay for the stuff now. This is deflation we're starting to see. Another tabletop staple getting cheaper, wheat. All right, what else is out there? Corn. Feed for animals, if feed for animals is cheaper, feed for humans gets cheaper, right? Food for humans will get cheaper. This is inflation tapering. Look at the price of corn just falling apart. All right, now, if this is in our products, if this is what we're paying for on the shelves, if the price is getting cheaper, I assure you, companies will have to start lowering their prices on the shelves. The top of inflation seems to be in. Now let's go look at something like this. Here's another, not yet you. Let's show them a different one. Let's look at Mr. Lumbero. So the price of lumber. Look at the price of lumber. And if we could just drag this chart out a little bit for you, you'll see it. The price of lumber, interesting on this one, because during the peak inflation, it got to 1,700. It's one of the biggest expenses in materials, right? Well, let's just make this a little bigger. Look at the price now. 373, that was yesterday. It's 352 now. It's even cheaper. All right, so this is a huge component that creates inflation. Something else that creates inflation. Check this guy out. And we'll take this to a weekly. Check this out. Here's copper. Dr. Copper, used in everything, cars, you name it, right? If it's in building at all, if it's in your watch, it's everywhere. It's in your phone, it's everywhere. So copper was 501 during the peak of inflation. Copper is in the 300s right now. Building materials getting cheaper. Commodities getting cheaper. Supplies are getting cheaper. The market's getting stronger. I am telling you, this all points to the bottom is in. Let's see what else there is out there. You know what? Here's another industrial. Should be July, right? Let me take a look. Take a look at this guy. Cotton. Inflation is taming. Look at cotton on the weekly, just falling apart. Cotton's in everything. You name it. If you wear it, it's got cotton in it somewhere. Was 155. It's now trading at 76. Even the daily. Look at the daily on cotton. Just has fallen apart since inflation started, right? Inflation was back here. Well, this is what's happened since the Fed started raising rates. Now it's 78, no longer 106. These are all, what else is there? Cotton, what else can we look at? There's so many other things. Oh yeah, let's go look at what else is proving that the bottom is in. Bitcoin. Bitcoin has been doing the same thing this year. The bottom has been in, and it has been riding this fantastic channel. It had one breach of the channel, hits the 200 ball moving average, right back into the bullish channel. So my thesis that the bottom is in is real. Now watch this one. This is the absolute. The three stock charts, or I should say the two stock charts and this chart here, are really the main gig. Let me show you that again. Check this out. If Apple, a huge component of the stock market, is bulling up like this, and Meta is bulling up like this, what's that on 7? Nope, 7, maybe 4 is Meta. We'll find that 12 is Meta. If Meta is looking like this, right? Huge component of the stock market. Apple looks like that. Well, check this out. I'm going to take you on a little ride, which I've shown to others in the past, and analysts seem to get this. Fundamentalists just don't understand what I'm showing them, but it's simple. Check this out. This is the NASDAQ weekly bar chart. Okay? This line right here is the 200 ball moving average, which every algorithm on the street has programmed in. Now I'm going to take you on a little journey. You see what just happened recently? We came near the 200 ball moving average, and my contention is that we will now go higher for quite some time. The lows are in. That's not the only reason, many others, but the lows are in. So take a little journey with me. Are you ready? Check this out. During COVID, you couldn't break the 200 ball moving average on the NASDAQ. Everything else broke. Dow, transportation, the YM, the even the S&P, all 200 ball moving average was pierced by the chart during COVID. During COVID, the NASDAQ weekly held the 200 ball moving average. Now watch this. It's never broken it except for once. 2019 got near it. But what happens after you get near it? A big rally ensues, right? Hold on a moment. Wait a minute. What do you got going on here, Oscar? What happened after you hit it here? Oh, a big rally ensued. Isn't that interesting? Well, let's go back a little bit. This is simple stuff, kids. What happened when you got close to it here in 2016? A major rally ensues. All right. Let's go back further. What happens when you hit it here? A major rally ensues. Major. I mean, this is a weekly. We're talking about hitting it in the 1700s and going to 2300. Major rally ensues. What happens when you hit it before that? You hit it again. Still a big rally. This rally goes from, I don't know, 1708 all the way up to 2057. The only time you were able to breach this was here. Look at this. This is the only breach that ever took place in the last 20 years. 2008, 2009. We expect that, right? From then forward, every time you hit this average, you had a major rally every single time. Every time. So we go to modern day. We hit it. We have a major rally of COVID. And we just finally came back and hit it again. What should happen next, kids? Straight up. Nothing goes straight up. Sorry about that. Following this is what will happen next. It is absolute. It is in the charts. I'm not guessing. I'm just showing you what's going on out there. The bottom is in. If inflation continues to drop the way it's dropping, which it looks like it is, and unless the Fed continues raising rates, if they go into a pause especially, we're done, kids. The bottom is in. Now, if you look at what I wrote back here, you can literally go see the video with me claiming the bottom is in, and I explain how the bottom was made. Technically, you could watch every chart, and it will show you the bottom being formed. Well, now that the bottom's actually has taken place and we're moving higher, the credibility, once again, of the OMNI is starting to shine through. Now, anyone that's been following OMNI long enough will be able to tell you that every year for 15 years, I've put out a long-term projection, meaning January is here. Where will the S&P end in December of the year? And the OMNI has nailed it every single year. Every year without trouble, except for 2012 when we had a flat year. The market opened, came back down, messed around, settled flat. Nobody was right. Barring that year, the OMNI has nailed the year-end projection every single year. I am telling you now, this is correct. I don't care what the other people say out there. I am the best in the world at this. I promise you. Just come see what I do. This is real. Everything else is conjecture. This is what will happen. If the Fed goes into pause mode, even better. So the charts tell you the truth. What people say, and the people who call me and tell me I'm wrong, that's opinion. I don't have an opinion. I read charts. That's my presentation to you. I hope this helps. I am basically done with what I wanted to show you. If you've got questions, Ken, I'll take a few questions. Barring that, I got to hop on a plane and get out of here.
Oscar, you're killing us. You got another 15 minutes to go.
All right, I could do more. All right, let me show you something else cool. Check this out. Here's another one that's working really well. Check out gold. Now, gold, it's got a lot of interest in it lately, and simplicity I'm using here. By the way, this is my technical analysis 101, what I would do laying in bed, laying on a cot in pre-kindergarten, drinking milk and cookies. That's what I'm presenting to you. I mean, I'm much more intricate than this, but that's not what this is for. This is to just show you the big picture. But when I'm doing my analysis to figure out where I'm getting in and out of the markets, it's much more complicated than what I'm showing you here. Just want to show you the simplicity behind what's happening. So in gold, this is what I call an Oscarism, known as an F flag. Anyone following me for the last 20, 30 years totally gets what an F flag is. The problem with an F flag is, bullish as it will remain while you're in it, if you break the F flag, it usually gets ugly in the opposite direction of the flag. In other words, a bullish regular flag, a regular traditional bull flag, you break out to the upside almost always if it's a bull flag. The F flag is something that will look bullish for quite some time, and then when it breaks out on the downside. So I want you to take a pause in buying gold for the next few days, because we're starting to test that too many times in a row. you may fall through that. Now, there are other factors as well, like the OMNI waved me off from buying gold today, so we didn't buy anything. But just wanted to show that to you. Let's see what else is really interesting out there. If any of you would like to call a stock that you want to look at, we can pull some stocks while I've got an extra few moments and just analyze them live here on the go. But I promise you, what I just showed you, don't listen to anyone else. Just listen to the charts. What I showed you is correct. Everything else is conjecture. You know, people come up with ideas. They heard this from a friend. They read a statistic. Who cares? The charts don't have any of that. The charts read everything that's ever come out and just no. Here's what the charts have. No BMW payments. No alimony payments. It's got no reputation. It's got no bills. No one cares what the chart thinks. And it knows that. It shows you exactly what's going on, I promise. So there's another reason why your metals have moved higher, and it's been this dollar. This dollar lately is forcing the other metals, or is forcing markets higher, the metals anyway. Grains don't care. But the dollar lately has been in this tailspin, bounced off the double bottom, started to look slightly promising, but you see what's starting to happen again. As the dollar pushes lower, it will push gold higher. You've got a situation right here. Just wait a couple of days if you're a gold trader, and it'll work itself out. So that's something I've been kind of looking at the last few days. I backed off buying gold this morning, although I will admit today, for day trading, let's see what we did here. For day trading today, I was wrong. I actually was short this market, not long, but it was because, of course, I had a sell signal left over from last night. I just stayed with it. Market went up, took out our stop. Now OMNI obviously is probably reversed to back higher, but we had a really good week before we had a losing trade today. No worries, we're day traders. For longer term, though, I'm telling you, this is really starting to look nice. All these markets look good. Let's extend this a little bit. And if I started throwing averages around, you'd also see that we're holding some key averages all over the place. So get ready for more upside. NVIDIA. Let's just look at something like that. Being that no one's calling out anything, look at NVIDIA. Look at how long NVIDIA has just been. Let's move some of this stuff out of the way. It's old-fashioned. Look at how long it was in this channel. All right, so nothing goes straight up, but instead of falling apart when it came out of the channel, look what it does instead. It doesn't fall apart. Instead, it just puts in some sort of a plateau, meaning it's probably taking a little time here before it jets up even higher. This is another huge component to the stock market, right? I'm telling you, we are not in a bear market anymore. Only the naysayers are in a bear market. The markets themselves, the stock market, is not in a bear market. So we have been pretty good with making these bottom top calls every time we've had a disaster. 2008, we called the top. 2009, we called the bottom. You know, along then, we've had some disasters. COVID, we called the bottom. And luckily, it's not because I think I know what I'm doing, because I'm a stupid human like the rest of us. You know what I mean? God forbid I started thinking I knew what I was doing. But I can read the charts really well, and I promise if you do the same and stop thinking, you can be much better at what you do. The charts will tell you where it's going to go, not some crazy idea, not some notion that someone has, not Larry Kudlow from the news. Nobody knows for sure except for the chart, and I'm a master at proving that to people. What else has been? Oh, let's go look at something like Amazon. We'll call them random charts. I don't know what we're going to see here.
Oscar,
yes.
You got a couple requests, stuff like Intel, Tesla, Beyond, BP, ZB.
Got it. Let's look at Tesla first. Everybody knows Tesla. So we looked at Tesla in our last webinar, to be honest, and we left these trend lines laying around, simple trend lines. But what we were talking about was we were at some sort of quagmire right here. And if you couldn't get above, we would start to drop. That was basically our last opinion in Tesla. And dropping, it is starting to do. And let's just take a look. I mean, is the street watching any crazy averages on Tesla? Tesla's probably got a really short average here, like something weird, like 18. I don't know. We'll see what the street's looking at. I'm not sure what they look at on Tesla. I mean, I'll find out in 30 seconds. Yeah, they're looking at the 18, aren't they? I knew it would be something silly and short like that. It's 18.21. They're playing off like an 18 or 21 bar algorithm on their averages, if you ask me. But you see what happened when it reached that pinnacle spot, it did fall apart right from there. And this thing is, you would call this a bear flag, right? I would anyway. And so some kind of bear flag took place here. And then the market dumped further. We'll get rid of that. The market dumps further. And, right now, I don't know what you'd call that, but you are in some kind of little channel pointing towards the downside. So do you love it now? Absolutely not, right? You couldn't like Tesla right now. You got to get above that red line first before you start liking it again. You mentioned a couple of others. Just call them out, and I'll be more than happy.
Intel was one.
Intel. See if it'll just come up. Integral. Where are you, Intel? Intel. I guess I've been working on this guy lately too, huh? All right, so moving some of this stuff out of the way. Let's get this out of the way. For Intel, and let's move away that crazy average that nobody else is going to watch except for on Tesla. All right, so simple on Intel is the 200 ball moving average, which, the street really pays attention to that because as you can see, when you get near it, something dramatic will happen if you can't get above it, right? Here, boom, drop. Once you finally get above it, something dramatic happens. So your test is going to be here, which comes in at about 29.90. If you fail again there, more downside coming your way. It was building a flat. As you can see, that's what we were working on right here. There was a flat building last time I looked at this, but it's gotten through that flat, a little bit above, tested the 200. I would say you have to just sit tight. If it gets above the 200, jump all over it. I mean, Intel is a good company. Doesn't really matter to me what the company makes as long as the chart is pointing up. So right now you're in a flat, you're underneath the flat. I wouldn't be buying Intel if you wanted to ask me what to do with it. I'd wait.
The other two that have multiple quests are, I think it's Beyond Meat, BYND, and there's a couple that asked about crude oil.
Crude, no problem with crude. Yuck. All right, so here's what I'll say about Beyond Meat. I wouldn't spend a moment analyzing it or wasting my time on it because what exactly are we going to get out of this? Look at the daily range. What could you possibly get out of a market that moves $0.50 a day? Why even bother with it? So what I'll tell you is don't waste your time on it, not unless you're going to hold it forever and pray that one day it takes off. It's a waste of time. It's a wasted chart. I don't like anything about it. In other words, for me, I look for markets at a chart that moves $10 minimum average on a daily basis. Minimum fluctuation, $10. That's something we could sink our teeth into. This guy's moved between 13 and 15 for the last few months. Nothing I would want to do with it. And then there's
SPY,
sure.
Russell, Amazon.
Oh, yeah, absolutely. So ES, let's see what chart I'm at. ES, SPY, it's all the same. Let's just clean that up. All right, so we're looking at the E-mini S&P here. And again, there's all kinds of good stuff on here. So we'll go over it slowly. Once again, let me just remind you, if we go anything past 5% risk, 5% interest rates, I am not risking my money to maybe make 10, maybe make 7 if I could get guaranteed 5+, right? Fed has to be careful that they don't destroy our market on us. So what we're looking at in the E-mini S&P chart right here is basically resistance being tested many times. In fact, I'll go back a little just to show you the first time it was hit. This line goes all the way back and hits resistance. Then the market gets back to it, hits it again, gets into a nice little bullish channel, and then into an Oscarism known as an F flag, falls out of that. So we remove the F flag. It is gone now, right? It doesn't matter anymore. New formations are coming along. So you've got the resistance here and here. You failed miserably at that resistance, came down and literally got under this channel, right? I mean, now we're under the channel. So that looked pretty ugly. But then you had your NASDAQ turn around today and explode. Everything else exploded. And basically what it is doing is what I would expect. It's a buyer of dips type market. So you had this little dip, and of course the buyers came right back in. So I think you can see what's most important now. You see this red line, this black line, right? This is what's most important to us now, is getting above when we hit it again. This time, you got to get above. So let's get rid of this. Here's where we're at. We hit it, dumped all the way to here, got near it, dumped, hit it, dumped, hit it, only broke down a little bit this time, right? Big difference. Now, if you go through again, you take off. So that's what you got to expect and look for in your E-mini S&P, and that is what I expect to get through that level. And then there was crude, right? And here's crude oil. So for crude, we're going to look at it two ways. One, you filled the gap finally and just continued on. So there was a gap right here. I don't know if you guys remember it, but you had this gap right here. All right, let's move some things out of the way. You had a gap right here. Well, it went down and finally filled that gap, but it doesn't look good overall, right? Crude does not look good here overall. So opposite of what I'm telling you about the S&P, the crude did the opposite. Look, big trend line here. Check this out. Big trend line there. Sorry about that, kids. And once again here. So you keep failing at this, right? Let's extend that forward into the future. So we keep failing at that line, and now we're running away from it. Filled the gap, didn't really rally back up yet. And if you ask me, this is more of a trajectory now going in this direction, right? Aren't we now in that direction? So it's starting to traject itself lower. And the likelihood of us trading about 70 in the next week or so is probably pretty good. Nothing, especially crude, doesn't go straight down, but it is starting to put in, you know, a channel working its way lower. And I think crude will absolutely end up at the bottom of this channel, just like it does every time. But you got to wait, right? You got to wait. So crude's on its way down now. I don't see why, unless OPEC comes out with something crazy and fundamentally flips it, why it won't continue to rally up a little and then drop further and rally up a little and drop further, as you can see it's doing here. And it is also in a channel. So we are now in this channel, and we'll see if this is going to hold. All right, let's just make this channel a little prettier. So now you're in a channel, and if this continues, it will stay inside this channel and work its way lower.
All right, curiosity's got the best of me on this. Sal's asking me to ask you to mention the Melissa Francis call you made on CNBC on crude oil.
Well, it's old news now, but I can mention it. So I got invited to be on television, and, you know, to get on TV, you think it's, so I'll give you a quick story. I got invited to be on TV. Oscar, would you like to be on television? I want you to speak about crude. And I wrote, well, I think crude's going down. And they write back, no interview for you. Well, I get another email 2 days later. Oscar, would you like to be on TV? Sure. What's the topic? They write back, topic's crude. I write back, well, I think it's going down. No interview for me. That's 2 days in a row. That same week on a Friday, I get an email. Oscar, would you like to be on TV to talk about crude? And I write, sure. What do you think? And they write, what do you think? And I write, I don't know. What do you think? Enter. And they write back, well, we think it's going up. And I write, well, what do you know? So do I. Enter, lying through my teeth. And they call me on TV. Now, I literally did a YouTube video the night before to show my OMNIs that were going down in crude, but I lied to get on TV. But when I get on TV that day, I'm not going to lie again. I'm going to tell the truth. So this is what happens. They invite me on. Melissa Francis says, Oscar, the president of blah, 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 blah. What do you think about crude? I go, well, Melissa, you know, at first you would think crude's going up, but I've got unequivocal proof technically that crude's going to break from $104 a barrel to $40 a barrel. And she went, that's it. He's a nut. Cut. They went into commercial, and she threw me off the set, literally. And as she was throwing me off, I said, Melissa, let me ask a question. How long have you been analyzing crude? And she said, a good 5 years now, Oscar. And I said, well, I've been analyzing crude since the day Mayor Dinkins came in and cut the ribbon for the commencement of crude trading. I was on the floor that day. I've been trading crude every day since. At least I know crude every day since. I am telling you, I gave you a projection, not a prediction. And she throws me off television. Well, crude literally breaks down to $40 a barrel, and I get a call back. Many calls. Oscar, how did you know? I said, well, invite me on TV and apologize, and then I'll explain it, which they did do. So that's what happened. But in order to get on TV, you have to agree with their narrative. If you don't agree with their narrative, you don't get chosen for the day. So I pretended it was going up until I got on TV, and then I spoke the truth, and they immediately vaudevilled me out of there. No truth allowed, Oscar. What's wrong with you? Well, that's what happened.
Oh, that's hilarious. Oscar, do you want to put up your advertisement? Or, I mean, I'd like to come in your chat room just because I have an appreciation for your personality. You've got me over here cracking up, and I feel like we'd mesh.
Well, you know what? I kind of do this every day of my life. I am here in this chat room, so I'll just put it up for you if I can find it. I keep clicking too many windows here. So I am here in this chat room every day and night of my life. And what this is, to be honest, I trained on the trading floor since I'm an 18-year-old kid until they threw me out in my 40s, right? They gave us all computers and said, go home. So when you're on the trading floor, you hang out, and this is what happens. You're busy as can be when it's busy, but when it gets slow, all right, you stand around, you play liar's poker, you put $100, you put a string, like a fishing string on a $100 bill, throw it on the floor, wait for someone to pick it up, you yank it from them, stupid stuff, right? Talk, have some fun, make some jokes. Then it gets busy, and we jump in the ring, and we're as busy as a heart attack, as serious as a heart attack. Well, once I left the trading floor, I'm saying, what do I do with myself during the day? I need people to hang out with all day when we're not trading, so that he can take up my time. And then when we are trading, we're serious. So what happens in this room? This is Live with Oscar. It's not Live with Oscar. It's basically, I live here 24 hours a day. I'm a professional trader analyst, and you can live here with me, and it costs you nothing. Just hang out with me. So go to livewithoscar.com to do that. Literally, let's just take this piece off here. It'll look like this. You go to livewithoscar.com, and if you're not already a member, just register. It takes zero information. Username, password, wait for your email. It might go to spam. When you get your email back, come join me in my live trading room. And that's it. It won't cost you a credit card. It won't cost you a dime. And you get to hang out with me all the time. And then from there, whatever happens will happen.
Oscar, you want to crack up?
What you got?
I still inspect every bill I get and have a collection for Liar's Poker that have 5 and 6 of the same number on it.
I love it. You got a nice collection of them? Zeros. When I would get all the zeros, I'd be like, yes, no one's going to guess this one.
Oscar, I want to thank you so much for being here. You were some much needed comic relief and absolutely incredible and great information, analysis, everything. It's a pleasure to hear you on and to have you here on Trader's Corner.
Anytime.
Cool.
Thank you for having me. Much appreciated.
By the way, Oscar, I love your YouTube videos too. Just because.
So we do a YouTube video every night, by the way. I don't know if some of you guys don't know about this, but every night I do a YouTube video. And basically it's a video that looks kind of like this. There's probably some volume on here somewhere. I think I've got it muted. But it's me talking for a little while, and then I go into a chart segment, which is really important. I show you exactly what should happen tomorrow and why. Right? So it's really very good information. And then I act out the trade that I gave you that night before in this video. I act it out the next day in my live trading room, and we do that 6 days a week, 24 hours a day. So if I tell you in my video tonight I'm going to do something tomorrow, rest assured that's what we will do tomorrow. And
Oscar,
you can find them on YouTube.
Oh, I'm sorry, go ahead.
You can find those videos on YouTube. I think it's literally called youtube.com/Chart Whisperer. I think that's what it's called. Yeah, at Chart Whisperer. So if you just look for at Chart Whisperer, you can find all my videos.
Oscar, thanks again for being here. I wish you a great weekend, and I think I'm going to be in your room one of these days just to laugh with you.
Come hang out with us, man. We have a blast. When it's busy, we're serious. When it's not, we're human.
Understood. Enjoy your weekend, sir.
Thank you. Appreciate it.
No problem. Ladies and gentlemen, that'll bring us to our anchor presenter. He's been a professional options trader for the past 13 years.